your investment thesis, and basically, should you buy a boring business? I know this is pretty much a buzzword at this point. It's becoming very, very popular, which is kind of counterintuitive because the whole point of buying a boring business is going into a space where there's not a lot of hype. But, with social media and, content in general, it's very easy for things to spread fast these days. And so, should you buy a boring business? Now, quick disclaimer, this video is for educational purposes only and should not be taken as financial, legal, or investment advice. All right. So why are boring businesses hot and only getting hotter by the day? You've probably heard of something called the silver tsunami. If you haven't, it's basically this phenomenon where you have the baby boomers that pretty much own majority of the businesses right now. Most baby boomers own businesses. They also own real estate, but a lot of them own businesses, and it's pretty much the largest wealth transfer of all time, as many sources say, just because the majority of these baby boomers that are retiring own businesses. So you have trillions, depending on the source, there's different numbers kind of being thrown around, but over the next 5 to 10 years, you have trillions of value, trillions of wealth that need to be transferred as these baby boomers retire. And a lot of their children or grandchildren actually do not want to take over the businesses. So with this in mind, you've probably heard about a lady by the name of Cody Sanchez, and she's probably the biggest, let's say, influencer in this space, who talks a lot about buying laundromats, talks a lot about buying car washes, but mainly I would say laundromats and boring businesses, right? And this is actually from Google Trends. So if you go to Google Trends right now and type boring business, you can literally see there's on the lower right hand section of Google Trends, there's something called related queries. So what are people also searching for when they search for boring businesses? And the number one search is literally Cody Sanchez. So she's done a phenomenal job of building up her personal brand. And to be honest, she does have a background in investing. She worked at Goldman Sachs, so she knows it. She knows what she's talking about, right? But she's done such an amazing job at building an audience and a following that there's pretty much a crowd now kind of flocking to buying car washes, laundromats, kind of average, let's say, people like you and I who may not have a private equity background. Now, this is a good thing, but it also can be a bad thing if you don't really know why you're doing it, right? Before you do anything, you should always ask yourself why. And so a big thing that people realize as they actually get into buying these businesses, right, is how do they actually compete, right? As a first time buyer, how do you compete with experienced buyers, right? And I have some screenshots here from different brokers that I've been talking to. Some of these are actually from within the past week or two. And as you can see here, this is a broker that said, I'd like to meet a potential buyer first. Do you have 20 minutes in any of the below time slots? And this is just to show you that as you start reaching out, whether you're on Biz by Sell, whether you're on Flippa, wherever you're looking for businesses, online or physical, you're most likely going to encounter brokers, also sometimes referred to as gatekeepers, right? And a broker's job is basically acting as a realtor, but instead of a house, they're helping people sell their businesses, and they're getting typically at least 10% of the final asking price, right? So they're very incentivized to make sure that whoever is inquiring is actually qualified and will be able to buy that business, right? And so if you're coming in as a first-time buyer with no experience, you might not even get to the seller, right? Because the brokers will quickly see that you're not prepared, you don't have much experience. And if you don't present yourself in the best way possible and put your best foot forward, you might not even be able to get to the point where you can meet the seller. And a lot of first-time buyers kind of have that problem, especially when you're looking to buy a business in an industry that you don't know anything about, that you have no experience in. So here's another one here where not only were they asked for a little bit about myself, they even asked for my LinkedIn profile, and even my buy box, which is basically what kind of businesses I'm looking to buy, and also how am I planning to fund that deal. All right. And just to show you, this is the same broker from this deal here. After I told her a little bit about myself, and I'll show you exactly in a few minutes kind of how to put all this together so you can really have great first impression. After I put my best foot forward and I told the broker a bit about myself, she then proceeded to schedule a call with the seller. Right. Thanks for staying on late for the call. So I spoke with the seller for the first time. This was our first call, and we spoke for pretty much a bit over an hour just because we were able to connect really well and build really good rapport. As you can see here, he obviously really liked you and is absolutely giving preference to a buyer with your experience, right? And that's why I titled this section here, How Do You Compete with an Experienced Buyer? Now, this is not necessarily just my experience as a buyer. It's my experience as an operator in the e-commerce space, because I also ran my own e-commerce businesses in the past and was fortunate enough to eventually get into buying established e-commerce businesses. I can see you said we've had a few offers coming already, but none from experienced buyers. And both P and I are prioritizing you and a few other buyers who are more likely to close because of your background. All right. Let me know if you think you'd like to talk. Next steps. I'm happy to help you with an LOI template and coming up with an offer. All right. So you can see here, once the broker, and in this case, this is an amazing person. She has a lot of experience. She's not maybe as let's say intimidating as maybe some of the other brokers I've dealt with can seem to the first time buyer. She's very nice person, right? But in general, brokers are actually not that intimidating once you get to know them. All right. And so you can see that once they realize that, okay, you're not wasting my time, they're more than willing to actually help you, whether it's with a template, contract, even telling you kind of what offer is even realistic so that you don't waste your time and send an offer that doesn't get accepted. But it's all about, once again, building that rapport and putting your best foot forward. So now that we've gotten this out of the way, let's actually talk about how you can put your best foot forward as a first-time buyer so you actually get past the broker and actually have a great first impression, right, with the broker and the seller. First, we need to focus. You need to focus on one niche. A lot of first-time buyers make this mistake. They're looking at all types of different businesses because they're consuming content, short form content at that, 30-second reels, 90-second reels on social media. That doesn't really give you enough to really dive deeper into the nuts and bolts of this whole M&A space, right? Mergers and acquisitions. If you're looking to buy a business, it's not as simple as as some people may make it seem, right? And the thing is, some people have been doing this for years, right? And so they make it maybe seem a little easier than it is, because for them it's like second nature. They've done dozens, if not hundreds of deals. But as a first time buyer, there's a lot that you just don't know yet. Okay. And the biggest thing really, if you get this wrong, it will cost you not only time, but also potentially a lot of money. You have to take the time to come up with an investment thesis, right? And an investment thesis really, as an investor, regardless of what you're investing in, regardless of the asset class, it could be stocks, it could be real estate, it could be businesses, right? Could even be crypto, whatever the asset class is you're investing in. It's very important to have principles and filters so that you can evaluate your potential opportunities, right? So it just gives you basically a framework, right, to determine, okay, is this investment something that actually makes sense for me? Not just something that makes sense for this other person here that has maybe a bunch of followers and that has done really well for themselves, but will this actually work for me and for my goals? Right. And so here is basically a company called Tiny, that was founded by a gentleman called Andrew Wilkinson. He's been buying online companies for years, maybe decades at this point. He's a Canadian billionaire. And it's a quick, high level overview of the types of businesses that they're interested in buying, right? Of course, you got to get a little bit deeper than this, but this gives you like a high level overview from high margins, right? High margins, um, successful operations, right? So they don't want to buy anything that's less than 3 years old. I actually prefer to buy 5 years or older. Um, the older, the better. High quality team, ethical approach, no sketchy shady businesses, right? So once again, this is a bit generic, but it kind of gives you, we're going to slowly drill down and get more specific here. Simple business models, right? Things that you can understand, nothing that's like revolutionary, cutting edge technology, rocket science type of stuff. That's not what we're looking for here, right? And some of this might sound familiar to you, especially if you've been looking into these boring businesses. And then lastly, healthy profit. And now this is a huge range, right? For us, smaller investors, we're not going all the way up to 50 million in profit. You're most likely going to be in the 300K to probably a bit more than a million in profit. That's probably the range that we're going to stick to. If you're a buyer like myself and you're using things like the SBA seller financing, etc. But now let's actually drill down and let's help you come up with your own investment thesis. It first starts with your personal goals. Why? Right? Just like a lot of things in life, if you don't know why you're doing something, you're most likely gonna make a lot of mistakes because your why should really be uh, what guides everything, and you reverse engineer from there. And so you want to live a life by design, right? Typically, people are buying a business because they want to spend more time. They want to have more time freedom, be able to spend more time with their family, actually build wealth. Because obviously, a job can sustain you, and a lot of times it's good to have a job when you're looking to buy these businesses because it gives you not only the ability to save up so that you can have the capital to invest, but also it shows that you already have some cash coming in and you're not going to rely 100% on the business, at least for the first couple of months, which is something that the SBA lenders actually typically like to see. Unless you have a bunch of cash saved up already, it definitely helps to have a stable source of income during this transition. All right, impact and passion, right? I see so many times people looking to buy a business and they just look at the numbers. They don't care what the business is. And that can be a huge mistake because obviously the numbers need to make sense. But the last thing you want to do is put yourself into a situation where you're running a business that you hate, right? Like even if the money is good, people tell themselves that, hey, if the money's good, I'll do anything. But that's actually not a good way to look at it because if you're going to be running a business now for years and you hate it, you actually might not do a great job at running that business, or you might hate your life, which kind of defeats the purpose of buying a business for freedom, right? And the last thing you also want to do is buy yourself another job that you hate even more than your original job. Of course, financial goals are important, right? How much annual cash flow do you want to keep? And exit value as well. One of the amazing things about buying a business is you're buying something that is established and that you can resell later. And risk tolerance plays a big part of this too, right? If you end up going the SBA route, which does allow you to buy bigger businesses all the way up to 5 million in terms of asking price, you will have to do a personal guarantee. And some people are very afraid, just like I was at first when I heard about SBA, how you have to do a personal guarantee, how you might have to even have your house, your own primary residence as collateral. But then when you do your research, you realize that bigger deals that are financed by the SBA are actually safer than trying to do a very small deal with like 50K in profit or even 100,000 in profit. Those smaller deals tend to be the worst because there's just not enough cash flow to hire good teams. And so you're stuck with another job because typically the seller is doing everything in that business, right? And also the default rate for SBA loans is less than 1%. So the default rate is very low. So it's not just any business that will get pre-qualified with the SBA. And then also the time horizon. Are you the type of buyer that wants to buy something and hold it forever, maybe even keep it in your family, pass it down to your children? Or are you more so looking to buy something, improve it, and then resell it for a profit a couple years down the line? All right. Now, there's a great book by Walker Dybel called Buy Then Build. This is the first book that I read when I got into this acquisition entrepreneurship space. And I highly recommend that you go on Amazon and you buy it. It's not really expensive, but I mean, the value that you can get out of that book, honestly, is amazing. So that's your foundation, your why. Now you have to look at your own strengths and your own experience, your own professional skills, right? What is your current job, or what has been your career, what has been your interest, what have you done, and where are your skills? Because this becomes very important. Um, whether you've been working in marketing, finance, sales, technology, operations, I mean, all of this will become crucial even as you try and qualify for, let's say, an SBA loan, or even rewind before that, as you're speaking to the sellers, as you saw, even the brokers, they will ask you, can you send me your LinkedIn profile? Tell me a bit about what have you done, because they want to see how your skill set will transfer over into actually running this business. Think about it. If you're selling a business and somebody's asking you, hey, can you sell or finance a percentage of this? Would you really trust somebody that has zero experience running this same type of business with with taking over your business, especially if you have to sell or finance? So basically, you as a seller, you're becoming the bank. And if they don't run the business properly, they won't be able to actually pay you your loan. So it becomes very, very tricky, right? And so that's why it's so important to really to try and stick to businesses and industries that you understand. And if you don't, then do your research and get to know that industry as quickly as you can and as deeply as you can. Um, Also, speaking the language, right? Where do you already speak the language, and your network, right? Do you have access to people? For example, I'm into the e-commerce space. I've been doing e-commerce over 10 years now, almost, which sounds crazy, but yeah, I started right around 2015, so it's been about 10 years. And so I have a huge network of other people that also do e-commerce, whether it's email marketing, whether it's media buying, Facebook ads, Google ads, whether it's people that even want to sell their businesses, because I'm in all these e-commerce masterminds. So I have access to deal flow as well. So let's say you're also into e-commerce, or maybe you built a great plumbing company in the past, or maybe you went into accounting, right? These are unique advantages that you will have compared to somebody that knows nothing about your space. So kind of a perfect segue, your unique edge, right? What will help you outperform other buyers? For me, it's my experience in online businesses, digital marketing, specifically for e-commerce. All right. So this is a principle you want to play in arenas where you already have a unique advantage. You already have an edge. You already have credibility, right? That helps tremendously. Now, also market filters, right? You want to obviously choose an industry that is growing, right? Because you don't want to go into an industry where companies are slowly dying. It wouldn't really make sense. You also want to find ideally what they call a fragmented industry. And so what this means is why car washes and laundromats, for example, have become so popular, and even private equity has been throwing a lot of money into these types of businesses, because there's not, for example, any huge national players, right? There's a lot of local mom and pop type shops, whether it's car washes and laundromats. There's a lot of kind of small businesses, and they're fragmented, right? So basically, there's just a lot of small players, and big companies like private equity companies can come in, buy a bunch of smaller local players, and consolidate them into one big company. And by doing that, they're able to get a much higher multiple than what they paid for the smaller individual companies. So that's why a lot of people even like home services, HVAC, plumbing, etc., because there's just a lot of small local companies and not one or a few huge national players that have already consolidated everything. All right. And then, of course, recession resistant is always something to think about as well. Um, you want to look at demographics. You want to look at, geographic location. Are you looking for, let's say you live in, a state like Georgia, where I'm at, right? Are you looking at plumbing companies in your state, or are you looking to buy something online? Right? I like online businesses because I can typically run them regardless of where I'm at, especially when I'm traveling. So I know a lot of people like online businesses because of that location freedom. So all of that are things that you have to consider as well. And then customer types, right? Are you looking for a B2B type of business, or are you looking to sell directly to consumers? All right. And then your actual buy box. So now we're getting closer and closer to the final investment thesis, right? The size of the company. Once again, typically you're gonna buy a business that's selling for $5 million or less, right? Unless you just have a lot of capital. I personally did not when I got started, and so the SBA does go all the way up to $5 million, and typically you have to put down 10%, and that honestly is more than enough as far as company size, because typically in this smaller business segment, right, smaller businesses, they're typically going to sell for a 2.5 to a 4.5 on the higher end. Really, a 4x multiple is the highest that I would personally go. And so if you're buying a business, let's say for $3 million, right, and it's selling at a 3x multiple, that means that business you're buying for $3 million is bringing in $1 million in profit, right? Because you're paying for a multiple of the profit. That type of business, essentially, you would make your money back within 3 years of running it, as long as the profit stays the same. Um, this is all theoretical. Of course, the reality is you're going to add a lot of debt if you go SBA route. So you probably wouldn't. It will work out a little differently because you're putting down typically 10%. So you actually could make your down payment back a lot faster than 3 years, depending how you structure the deal and how it goes post acquisition. All right, so you got to think about that too. What I would say from my own experience, stay away from businesses that are too small. It's very tempting, especially as the first time buyer. You might be thinking, hey, I just want to get my feet wet. I want to do a small deal. You can do that. I'm not saying don't do it, but just think about this. Smaller businesses tend to be riskier and tend to be a lot more work because there's no teams in place. And so the sellers, the previous owners, they're typically doing all of the work. And so if you already have a very busy job, unless you already know somebody that knows the industry and can help you run that business, and you won't have to pay them um, a reasonable market rate salary, it just probably wouldn't make sense, right? When you can basically put down 10% and buy a business that's bringing in 7 figures in profit, or at least mid to high 6 figures in profit. All right. And then also, based on your skill set, if you have a marketing background, for example, or a sales background, for example, maybe you want to look at buying older companies that have great products, great distribution already, great brand identity, but oftentimes with older sellers that want to retire, they're not pressing the gas on marketing, right? They just don't want more work, or it might not be their forte. It might not be their thing to run digital marketing. Right. And so that's typically, for example, what I look for. Older supplement brands, for example, skincare brands, for example, with recurring revenue that are 15, 20 plus years old, have very old websites, but have amazing products, and typically are not spending a lot on marketing. And then lastly, you want to think about the deal structure. Are you going to go SBA route? Is the seller open to seller financing? And ultimately, what is going to be your debt service coverage ratio? This is basically how much cash flow the business has in relation to the debt that you're putting on top of it. All right. Now, you also want to have red flags that immediately allow you to put opportunities into a bucket. So I have another video on my YouTube channel here, where I talk about the risk profiles, low risk, medium risk, high risk, specifically for online businesses, right? So one of the biggest things, you don't want to buy businesses that are declining in revenue or even profit margin, right? Because that's pretty much a turnaround, and that is a lot of work, and it's a lot of risk. Customer concentration is also typically very, very important. Now, for the types of businesses I look at where we're selling to, we're direct to consumer, we're selling products to a lot of individuals, we rarely have a customer concentration problem because we're acquiring thousands of customers, right? But when you have maybe a B2B business, maybe an agency, for example, you want to be careful when you have one single customer that brings in even more than 20% of revenue, right? But definitely higher than 30% is risky, because if you lose that customer after you buy the business, you just lost 30% or more of your revenue. That can kill your business, especially if you added debt on that business when to actually acquire it. Key man risk is also a huge thing, right? If the owner is basically wearing every single hat in the business, that's a problem, because let's say the owner is looking to retire and that's why they're selling the business. That's going to be very tough for you, right? And so, once again, with smaller businesses, you tend to see that where the owners are doing everything. Also, not only the debt, right? You think about the debt that you're putting on a business, but there's also working capital, right? Depending on the business that you're buying, different businesses require different levels of capital to keep them going. So you want to think about that too. And then there's industries that you really probably don't want to touch, right? Obviously, startups or anything less than 3 years, in my case, even 5 years, I usually don't want to touch. Trendy products that, are just trendy, but you don't know if they're going to last, I stay away from those. And then things like restaurants, for me personally, I don't, restaurants and gyms tend to be very tough, right? But you have to do your own research, and there are also some things that you just might not want to deal with. For example, right? For example, some people might not be too good with technology, and so for you, if you don't even like using your computer and being on your laptop, then buying an online business probably doesn't make sense, right? So things like that you have to consider. And then we're finally getting to almost to the end of this. You want to be able to run a quick test, right? Let's say a business passed all of the filters that you set up. Now, let's see, does it actually align with your why? Yes. Your strengths? Yes. Your experience and your filters? Yes. Can you see a clear growth plan in the next year? Yes. Perfect. Now you want to also run what's called, quote unquote, a stress test, right? So you look at the P&L, the profit and loss statement, for the past 12 months. Now, typically, as first time buyers get into this, it's a very exciting thing. You look at, wow, like if everything goes well, look at how much cash I could make. And you're already thinking about, man, I could quit my job. I could make 2, 3, 4, 5 times more than I'm making on my job. And so you get really excited, and there's nothing wrong with being positive, but it's also important to think about what happens if things went south. Let's say revenue declined by 20% next year. Could you still service your debt? All right. Let's say you take a loan, whether it's the SBA, whether it's seller financing, and another alternative type of loan. Can you pay back your debt? Can you make your monthly payments even if you lose 20% of the revenue? And would you still be able to pay yourself a salary? Obviously, you never want to buy a business that's going to decline in revenue by 20%, but just kind of worst case scenario, right? You want to be able to look at that worst case scenario too. And if the answer is yes, even if you lost 20% of the revenue, yes, you can still service your debt. Yes, you can still pay yourself a decent salary. Then you've probably found yourself a very solid deal. All right. So the last thing you want to do now, based on all of these right here, you want to go back and put together a brief paragraph based on your strengths, your experience, your resume, your skill set, your goals, your why, the capital that you have available, the industry that you're familiar with and that you want to go into. You can now start filtering through this investment thesis, put together this paragraph and say, hey, I'm so and so, and I'm looking for, let's say, a business that's at least 10 years old, that has recurring revenue, that has a team in place, that's making at least 500K in net profit, and that, for example, has asking price that is maybe, let's say, 3.5x at the highest, right? So you start filtering things down. For me, for example, when I meet a broker, I say, hey, I've been in e-commerce space for 10 years. I've even worked as a marketing director for supplement companies. And I'm looking for, let's say, a supplement brand that's at least 10 years old, has recurring revenue, but that although it has great products, it has an older owner who is not doing a lot of marketing, specifically on the direct to consumer side. Maybe they're doing great on Amazon and they're relying on Amazon, but they have this outdated website and they're not necessarily spending or focusing on digital marketing, whether it's Facebook, Google ads, etc. Because I can then come in and leverage my skill set, which I have the proven background with my resume, not just with my own businesses, but with companies that I've worked for, to actually improve that business. And so that alone makes you stand out from the vast majority of buyers who are just like, I have a bit of cash, I want to buy this business. How much are you making? All right. And you got to think about it too. As a first time buyer, do you really want your differentiator to be money? Like when you're speaking to a seller, do you really think that just having a bit of cash is going to help you stand out? That's not the game that you want to play, because if cash is what you're leading with, you're going to attract sellers who just want to sell their business and sell into the sell into the sunset, right? And they will most likely want to sell their business to a private equity company, or maybe if it's not a private equity company, just a buyer that has a lot of cash. And me personally, I didn't have a fortune to put into this when I got started, so that was not going to be something that I would lead with. It was more so going to be my experience and how I could actually relate to the sellers. So I urge you to kind of look into all of this, take your time. If you have any questions, you can drop a comment. Also, feel free to join my Skool community. I have a full free mini course on all of this stuff. And at the end of the day, you want to build rapport, right? You want to build rapport. That's really the biggest thing, because I see it all the time, right? Like competing with experienced buyers is not easy if you're just leading with money, right? You really want to understand the industry that you're getting yourself into, because sellers can quickly sense that you're just in it for the money, right? And I'll leave you with one last thing. If you're actively looking at businesses for sale now and scheduling meetings, and you're having a hard time getting past the gatekeepers or leaving a good impression on the seller, ask yourself, what is that seller thinking? Put yourselves in the shoes of somebody who's selling their business, right? If it's a great business, they typically, one, want to make sure that they sell it to the right person that's going to take care of that business. And two, they typically want to actually sell it to somebody that they actually somewhat like and trust, right? Because chances are you're going to need them post acquisition. So you're going to be working hand in hand for 3 months, maybe 6 months. The last thing they want is to work with somebody who is annoying and who only cares about money, right? So you have to really, the first call with a seller, don't even discuss numbers or try to negotiate, right? Just try and understand them. Why did they name the business? Then how did they come up with the brand name? What made them start that business? What were some of the challenges that they had over years? How did they manage to run a business for 5, 10, 30 years? Build that type of rapport. And if you don't know anything about that industry, try and actually learn, right? Pick up books, look at the masterminds, look for physical events, even if you can. Let's say you're looking to buy a home service company, let's say, I don't know, plumbing company, right? You should probably start understanding the language if you don't have that background, right? Beyond just the numbers, try to understand what are the actual challenges that plumbers or people that own plumbing companies deal with. And just doing that alone will take you very far. And then take the time to come up with that investment thesis, even if it's just a couple of sentences, a couple of phrases, why you're looking to buy that specific type of business, and how your skill set and experience will help you run that business and ideally grow that business profitably. All right, so thanks for watching the video. I hope this was helpful.